With us, top management from Neuland, represented by Suchet Davuluri, Vice Chairman and CEO, Saharsh Davuluri, Vice Chairman and Managing Director, and Deepak Gupta, the CFO. We have sent out the press release as well as the detailed presentation, and the same have been uploaded on the website as well as the exchanges. You could take a look at that, or in case anyone wants, we could mail the same to you. Before we start, I would like to remind you that everything that is said on this call, which reflects any outlook for the future or which can be construed as a forward-looking statement, must be viewed in conjunction with the risks and uncertainties that we face. These uncertainties and risks are included but not limited to what we mentioned in the prospectus and in the subsequent annual reports, which you will find on the website. With that said, I will hand over the floor to Saharsh, who will give you the highlights of what has gone past. Saharsh?
Good evening, friends. Can you hear me?
Yeah, I can hear you.
Okay, great. Thanks. Good evening, friends. Thank you for joining this call. Since we still seem to be in the midst of the pandemic, I do hope you and your family members are doing well, and wish you the very best in coping with the current situation. As in the previous quarters, I will be speaking for a few minutes on the overall performance and touch upon the drivers of the business, post which we'll open the call for Q&A. We have shared the detailed presentation that Divakar was referring to, and it contains all the individual numbers, and the same is also posted on our website and the exchanges. So let me give you a short summary of the quarterly performance. We're very pleased with the performance as we turned in another record quarter in terms of revenues at rupees 242 crores, which amounts to 29.6% growth on an annual basis. The GDS and the CMS segments have both contributed to the growth this quarter, and we are confident that we will continue the momentum through the end of this fiscal. The long-term visibility for the growth from both the segments looks positive, and this has been further aided by the revenue generation from Unit 3, which has been successfully commercialized at the end of second quarter 2021. EBITDA at rupees 41.4 crores was again the highest ever, with margins improving to 17.1%. The increase in EBITDA margin is a combination of better operating leverage and improved business mix. The prime segment performed well this quarter, and we expect the trend to continue in the near term. The growth was led by levetiracetam along with the continued growth of mirtazapine and labetalol. The CMS segment reported a quarterly revenue of 77 crores, which was in line with our expectations that CMS will be a key driver for growth. Our baseline projects in CMS continue to perform well, and we are seeing good progress from some of the projects under development, which we expect to commercialize over the short to mid-term. I also want to remind everyone that CMS revenues tend to be lumpy, so it would be prudent to look at growth over the long term. As always, we have provided the table showing progression of CMS projects for your ready reference. I would also like to use this opportunity to welcome our new CFO, Mr. Deepak Gupta. Deepak brings with him over 22 years of experience with companies like Nestle, Coca-Cola, and Indonesian Foods. With that, I request the moderator to open the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sudhir Bheda from Consultancy Private Limited. Please go ahead.
Good evening, sir, and congratulations on great set of numbers. Hello?
Yeah, please go ahead. Thank you.
Yeah, am I audible?
Yes.
Yeah. Sir, congrats on great set of numbers. My question is on capex side. I think in 6 months we have incurred a capex of 57 crore, and as you are saying that Q3 is fully operational. So I think what would be the further capex going forward? Have we done with the capex? That is the number one question. And two, sir, in a CMS business, we have seen that your margin is improving because overall your percentage of revenue from CMS is increasing. So, have we converted a small business, or maybe, you was referring to some 5-10 crores of business to 40-50 crores. So that is this percentage increase is led by those kind of things. That is my second question. Thank you, sir.
So thanks for the question, Sudhir. So we had indicated in our previous conversations that we expect the capex for this year to be approximately 90 crores. So far, as you've said, 57 crores or so has been deployed. We expect our capex plans to be more or less in that line. But considering the opportunities with regards to the growing business, there may be need for additional capex, but at the moment we don't have any further updates to what we've said previously. With regards to the CMS business, as I had mentioned in my opening remarks, the growth of the CMS business has been driven both by new projects, which are those small projects which you mentioned, as well as the commercial projects which have been part of our baseline. Going forward, we expect some of these new projects to become commercial and therefore give a more sustainable long-term growth. And we expect the baseline projects to continue to do well. So it's a combination of both the new projects as well as the existing projects that will drive the future growth of the CMS business.
So is it fair to believe that still percentage of CMS business will go up going forward in overall business?
So as I also indicated, from a long-term perspective, we expect that the CMS business will grow and contribute to a greater share of the revenues. However, there could be volatility because the business itself is lumpy, so it may not manifest in consistent quarter-on-quarter growth. But if you can see this time, over a 240 crore revenue, 77 crores has come from CMS, which is almost 30% of the business. So we think this is a reasonable benchmark, but it may not necessarily be exactly this number going forward.
Thank you. I would request Mr. Bheda to rejoin the queue for follow-up questions. Ladies and gentlemen, we would request you to limit your question to 2 at a time. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Sajal Kapoor from Unseen Risk Advisors. Please go ahead.
Yeah, hi. Many thanks for the opportunity. So a question is related to the nature of the CDMO or the CRAMS industry. We have both large and micro-sized players. So on one hand, there are giants like Thermo Fisher and Lonza, and on the other side, we have a large crowd of smaller players. So given this fragmented industry, how is Neuland positioned for future growth? So, I mean, in India, we do have capital and labor cost arbitrage, but what about the technical competence and some of the other capabilities that we need to compete globally in this large industry?
Yeah, thank you for the question, Sajal. So in the CMS business, your question is what makes Neuland unique and how do we compare ourselves with some of the other players? I think maybe two things I would say in response to that. One, we do have a lot of technical capabilities which differentiate us from a lot of other players in this field. We tend to focus on those technical capabilities. It could be deuterated compounds, peptides, chiral chemistry, etc. And there's a long list, and I don't want to go into all the details. But we tend to focus on working with clients who find the need for such capabilities. That's the first point. Second, we find ourselves to be working more successfully when we work with biotech companies. That has been a model that has proven to be successful for Neuland, which means that our sweet spot is working with small to mid-sized companies who require an end-to-end solution from the CMO, rather than working with big pharma who essentially look at CMOs more as task owners. And therefore, over time, we've built a very strong set of relationships with a lot of small to mid-sized biotechs, whether they are in US, Europe, or Japan. And we've built our relationships based on them. But what's been unique about Neuland is that we provide an end-to-end solution, which means that when they are filing their new drug applications, they can rely on Neuland not supplying just the API, but the complete technical package, which is needed for a successful NDA.
That's helpful, sir. So maybe secondly, it's a related question, but it's a different one. So when we sort of compare YOY over the last few years for our CDMO or the custom manufacturing performance, both revenues and the pipeline of molecules have grown steadily, which is always a healthy indicator. But would request some qualitative input from your side. So, for example, how innovators and clients from Japan all the way to the US view Neuland's capability today versus, let's say, 5 to 6 years back?
We would definitely like to provide more qualitative information, Sajal. I think the data we provide, which is, the number of molecules in different stages of clinical development, is a quantitative way that shows how our pipeline has been evolving. Besides that, we'll try to think of other qualitative ways to give you insight. But maybe a short off-the-cuff response would be that, we tend to work a lot with US biotechs. We also work a lot with Japanese innovator companies. We do work with big pharma, but that's perhaps not our core competence or not really the sweet spot, as I mentioned earlier. But we take your feedback and we'll think about other qualitative ways to define the CMS business so that investors could better understand the business.
Thank you. I would request Mr. Kapoor to rejoin the queue. The next question is from the line of Sunil Kothari from Unique Investment. Please go ahead. Sunil Kothari from Unique Investment, your line is in the talk mode. Please go ahead with your question.
Yeah, thanks a lot. Thanks for opportunity. My hearty congratulations to team at Neuland for this steady and sustainable and growing business. Sir, I have only one question. That is, over a next maybe a year or three, top management, what's the priority and focus area where you want to give your personal time, your core team, your R&D team? What exactly our major strategic focus area where we want to maybe improve or want to maintain or create a organization which will be sustainable, growing sustainably for maybe next 5-10 years. So if you can just qualitatively talk about something good.
I think that's a good question, Sunil. I think, primarily I would say 3 areas. I mean, there are a lot more areas that we focus on, but if I had to talk about the top 3, I think one is definitely ramping up our generic product pipeline as well in terms of the number of products that we're scaling up and the DMFs which are coming out. That's definitely a focus area for us. The other focus area really is to get our manufacturing strategy right, because as Harsh was saying in his comments, there's a lot of trust, a lot of business and growth in the CMS business. As you already know, for our GDS portfolio, we're already a market leader on several of those molecules and we're gaining market share with the remaining of them. So for us, it's important as to where these products are manufactured, what will be the capacity, how efficiently are we manufacturing them, so that we protect the margins, gain market share, and consolidate our position. The other area would be purely in terms of people, because the performance that you see today is a direct reflection of the hard work which is being done by the entire Neuland team, just not the leaders, but the people in various departments in terms of collaboration, looking at where the problems are and figuring out ways to work together to solve those problems is a direct reflection of our financial performance today. And finally, we're also looking very closely at digitization as to how we embrace technology so that we can make faster decisions, more data science, more analytics, so that we become a much more agile and nimble organization, because as the top management, as the board, we feel that the future belongs to organizations which can be extremely responsive and agile in their decision making as well as our execution. So those would be the top 3 or 4 areas that we would be spending most of the time.
Great. Thanks a lot and wish you best of luck. Thank you.
Thank you.
Thank you. The next question is from the line of Suhrid Diora from Paladin Capital Management. Please go ahead.
Hi, good evening. I have 2 questions. My first question is, could you please help us understand what is the split between price and volume growth on the GDS side of the business, and how that contributed to revenue and profit growth?
Sure. What's the other question, Surya?
The second question is related to Unit 3. I wanted to understand what is the capital employed in that unit and what is the revenue potential?
Okay, so let me answer the first question first. Basically, in terms of price versus volume growth, we would largely say, and we've made this comment in the last quarter also, we've seen a slight easing of pricing when it comes to generic API pricing across the board. But that doesn't really translate to, anything significant. Maybe, somewhere in the low percentage points, maybe 3-4% or so. But importantly, we see that as a sustainable increase in pricing. But that's something that we'll also have to see depending on how the circumstances, given the US elections, the trade conflicts, etc., might pan out. But what's important is the volume growth is what's really driven the business. Products like levetiracetam, mirtazapine, levetolol that I mentioned have really driven volumes, and that's how the overall business has been moving up as well. Maybe I'll just ask Suchet if he can just add some thoughts, and also maybe Suchet, you can respond to the second question.
Sure. No, I think, like Harsh was saying, I think our generic drug business has been a combination of volume as well as value, especially our baseline business. As you know, we break up our Gds business into what we call the specialty business as well as our prime APIs. So we've seen that our growth in the prime APIs has exceeded the budget by about 12 or 15%, which means that we've gained the market share and we've seen an increase in volume. At the same time, we've also seen that our specialty business has performed as per the budget, and therefore that's and it's become, so between prime and specialty, they're really contributing to about 50% of the overall revenues, which is a clear indicator that the margin of the GDS business is growing as well. Right now, in terms of the capital employed in Unit 3, I would say we're in the range of about 175 to 180 crores. But obviously that number changes continuously because we continue to invest in that unit. As Harsh was saying, we've commercialized, we made the commercial shipments for the first time in this quarter from that unit, and we will continue to ramp that unit up. In terms of the projected revenues, we're just in the process of finalizing our budget for next year, so we don't have a clear breakup of what will be the revenue projection from Unit 3, but it will be a sizable revenue. Thank you.
Sorry, can I just clarify? I don't need, I meant what is the maximum revenue potential from that unit? If you could quantify that in terms of an asset turn, if that's possible to do.
Not at this point. It's definitely a number that we're constantly working on. So we do have projections, but that will also change based on the product mix and how we allocate the capex in line with manufacturing strategy for each and every product.
All right. Thank you.
Thanks.
Thank you. We would request participants to limit your question to 2 at a time. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, thank you very much for the opportunity. So you spoke about a lot of areas where we are kind of focusing on, and plus this Unit 3 as well, which has commenced and which will contribute to your revenue. So what sort of any sort of growth outlook that you can share would be helpful.
Yeah, Deepak, as we mentioned previously, we don't give any specific guidance for the business. We've maintained in the past, and we've said that, on a long-term basis, we think that this business, we should expect a 15 to 20% growth, but that's something that you may not be possible on a quarter-on-quarter or a year-on-year basis. So I would just kind of reiterate that same comment.
Fair enough, understood. Okay, sure. That's it from my side. Thank you.
The next question is from the line of Keval Ashar from an individual investor. Please go ahead.
Yes, congratulations, sir, for the great set of numbers. So I have 2 questions. So first is, right now we have 3 molecules in phase 3, 10 in developmental stage, and 6 in commercialization stage. So how many molecules can we expect in commercial stage over next 2 years?
So the molecules which are currently in the commercialization stage, those are the molecules which are imminent and likely to get into the commercial stage. Typically, these are molecules which have, will have to go through, maybe an FDA approval or maybe a alternate site qualification process. I would say it's hard to be very precise on the timelines because those timelines are not in our control. But I would say maybe in the next 2 years, we would expect at least 3 molecules to get into the commercial pipeline. But that number could vary depending on a lot of, circumstances from the FDA perspective or the regulatory agencies perspective.
Great, sir. And the second question is, if you can give us idea on average revenue per molecule in the developmental stage and the commercialization stage.
It's very difficult to answer that question because there's a very wide range. You can see from our table we have over 15 molecules. I can tell you that there are some molecules which only contribute 8 crores per year. There are some molecules which contribute maybe 50-60 crores per year, and we expect some molecules to maybe in the future contribute even much higher than that. So there's a very wide range, and I think we are hopeful that the growth will be better than what we expect. But we don't want to give any sort of guidance, or even we don't want to give you any sort of an assumption at this time because the range is just too wide.
Sure.
Thank you. The next question is from the line of Hasmukh Gala from Finvest Advisors. Please go ahead.
Yeah, sir, congratulations for really good set of numbers. We have been tracking Neuland for quite some time, and the structural changes that has been made in the last few years is really noticeable and appreciable. Sir, we just wanted to know on the macro perspective that what is basically driving now the demand for API intermediates and CMS business, and how are we going to modify or tune our strategies to meet those emerging requirements. Like one of them was that people shifting away from China, then Europe is also going to do a lot of things on that. That is the first question. And second question was on the peptides. In the last quarter call,
you had said that, there are a few molecules which could be, they will reach the stage of filing DMF in probably 1 or 2 years. So what is the development on that, sir?
It's a good question, Hasmukh. I think, like you mentioned, there are a couple of different factors driving this. One is especially what's happened in the last 2 or 3 years, where China is increasingly seen as a partner that cannot be trusted. And nowadays, the term that trade without trust has become a very common sentence which is attributed to China. I think that's one development. People have also realized that APIs are the heart of the pharmaceutical industry, but at the same time, not everybody can succeed in the API game, because at the end of the day, it is a complex industry. It is complex in terms of process development, scale up, large-scale commercial manufacturing. As Harsh was alluding to one of the questions earlier, Neuland's place in the pharmaceutical industry is able to take a technology which is underdeveloped, I would say, which is nascent, and help take that technology through the clinical pipeline all the way to commercial manufacturing, including the product life cycle and past the generic launch as well. And that's where Neuland has been increasingly successful, and that's why our customers trust us in terms of being able to take a molecule which is in early stages of development all the way to commercial launch and beyond, so that they have a partner that they can trust with. So the other thing I would also like to add is that Neuland has never really competed only based on cost, though there might be a cost arbitrage for certain molecules being manufactured in India. We've always focused on technology and our technical capabilities for the molecules and the projects that we bid on. So I think our strategy going forward is to make sure that we have a good manufacturing strategy that will give us the right capacity, right cost structure, have a supply chain strategy which brings our supply chain much closer to home, where the supply chain is much shorter. Even now, less than 25% of our supplies come from China. By the end of this year, we expect that less than 10% will come from less than China, so we are completely insulated, and we're actually spending most of our rupees in dollars here in India and other parts of the world. We will continue to invest in manufacturing as well as technology so that we continue to be more efficient and continue to build on those relationships that we have with our generic customers in terms of the number of molecules that they buy from us, as well as the contract manufacturing customers, so that they can come to us with their future projects, as well as increase the share of product that they buy from us. So that's kind of what Neuland is trying to do in a nutshell.
Correct. So, as our majority of the revenue is coming from Europe right now, and Europe is going to scale up the API manufacturing facility for some of the APIs. So how is that going to affect our business in future?
Well, Europe has been trying to scale up its APIs for the last 20 years, Hasmukh. I've heard this storyline again and again. Europe has been having conferences at least 3 or 4 times a year with its API manufacturers as to how they can gain their position that they had in the 70s and 80s in terms of API suppliers. So I would not undermine Europe's effort. What I would say is that not every company can manufacture every molecule. I think Europe could become a leader in certain molecules based on where they invest their dollars and where they focus. But I feel that, Indian API players such as Neuland are very strong, and API players such as us, who've been around for a while, who have the depth to understand what it takes to manufacture an API reliably in compliance with a good track record with the FDA and a good cost structure and a future clear manufacturing strategy will succeed. And that will happen independent of whether you're in Europe, India or China.
Thank you. I would request Mr. Kala to rejoin the queue. The next question is from the line of Raj Rishi, an individual investor. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So any plans to raise resources like equity or debt?
No plans at the moment, Raj.
Acha. No, just a perspective that right now the market is pretty willing to back company like Neuland. So don't you think that should also be a reason to raise resources, say on the equity front, since the opportunity is so large?
I think as we had explained in some of the previous comments, we have a fairly robust business plan in front of us. We've recently capitalized Unit 3. We've created a lot of capacity over there. We have plans to deploy some more capital into Unit 3 to make sure that it fulfills the needs of the business for the next couple of years as well. And for all this, the capital has been already planned for. The balance sheet, the ratios, the debt arrangements that we have made plans for seem reasonably adequate. So at this point, we don't see a need for infusing equity into the company. But as the needs of the organization might evolve, we will definitely look at it. We understand your point of view that the markets are favorable for raising capital at this time. But we don't see the need for raising capital, not just immediately, but for the near to midterm as well. Okay.
And sir, any plans for inorganic growth? Any acquisition targets you're looking at or something which you can share with us?
Nothing that we can share, Raj.
Thank you. I would request Mr. Rishi to rejoin the queue. The next question is from the line of Jay Vora, an individual investor. Please go ahead.
Yeah. Hi. Thanks for the opportunity and congratulations for the excellent set of results. So I was, going through the presentation and I could see that, generally the second quarter is good. So is there any seasonality factor over there? And in current quarter as well, the revenue from the CMS business and especially in the commercial, so it was very good. So was there any one-off or bulk order or something like that? And if that is not the case, then can this quarter be taken as a base for the coming quarters?
I think in the API business, I think what we've seen over the last several years, there does tend to be some kind of trends. We've seen that the third quarter of the year tends to be a year where revenues could possibly dip, although we don't want to comment anything about what's coming up. That's also because it is the fourth quarter for most of our customers based out of Europe and US. Typically, the rest of the quarters we don't really see any discerning trend. So I'm not sure if I would agree that second quarters tend to be strong. Other than that, I would also just kind of recap what I had said in the opening remarks. I think the CMS business, we are very pleased with what we've done this quarter. It's a combination of baseline business, which is recurring commercial business, as well as new business. And therefore, it's not necessarily a one-time business, but at the same time, the CMS business does tend to be lumpy. So there could be, certain periods where we see higher revenue coming in. But having said that, I think from a medium to a long-term perspective, we think this quarter's performance is a very reasonable base. But again, I would add the caveat that being in the API space, we do deal with a lot of uncertainties. So we don't want to sound extremely confident when we say that the base will remain this way and there will be no uncertainties going forward. So I just want to add that caveat as well.
Got it. Thank you so much. And my second question is that, barring these 3 quarters, when I look at it, almost 4 or 5 quarters back, so, we were adding somewhere around, I think, 5 projects every quarter for the CMS business. But that has, a bit slowed down to 2 projects per quarter. So, is there any specific reason to this?
I think that's a very good question, and I think the reason for that is as we've seen the CMS business mature, we've started to focus a little bit more on late-stage opportunities. We do still get a lot of early-stage opportunities, but both from an execution point of view as well as a business development point of view, the teams have been focused more on late life cycle projects. And as in the case of any, serious contract manufacturing organization, the idea is to vie for projects which get to commercialization as quickly as possible. So therefore, it is a positive indicator that we are adding more projects in the late stage of the pipeline. Having said that, we do expect early stage projects to get added to our pipeline as well. So there's no real strategy of not adding early stage projects. We could see that trend changing, but your observation for the last few quarters is absolutely right.
Thank you. I would request Mr. Vora to rejoin with you for follow-up question. The next question is from the line of Aditya Khemka from InCred AMC. Please go ahead.
Hi, thanks for the opportunity. Sir, a couple of questions on your revenue side. So, I noticed we have the CMS and Gds business, and you commented that on the CMS side, we work with SMID companies, biotech companies in the US, and, Gds obviously is generic drugs. So, and your geographical split, when you say 48% of revenues come from end market of Europe, would it be fair to assume that a lion's share of our Gds revenues come from the European market and the lion's share of our CMS revenues come from the US end market? Is that a fair assumption?
I think for the GDS business, absolutely right. I think a large part of the business comes from Europe, followed by the other markets. I think for the CMS, I would just kind of agree with you, but also state as a caution that the CMS business is still, an evolving business, and the geographic contributions could tend to vary as different projects scale up. They could also vary quarter to quarter because, you could have a European customer place more orders, and therefore a particular quarter's numbers or a particular financial year's numbers may be skewed geographically towards one region. But if I have to say today in terms of CMS, our largest market is the US, and Japan and Europe are, following that. But that could also change depending on how different projects scale up.
Right. So the reason I asked this question was on your commentary on GDS. You said that there was some leeway on API pricing that you could experience, in the past quarters. I'm just a little surprised because the European markets itself are going through a very difficult time when it comes to, their financial positioning and the austerity that these governments are practicing. To add to that, COVID situation has been probably worse in the European region compared to other parts of the world. And therefore, prescription volumes should ideally be also soft versus a normal European prescription trend, in the earlier periods. So how is it that in this environment, we are able to, one, take some price leeway in our products, and two, we are able to sell enough volume? So are we gaining market share from 20 to 40%, and our competitors are losing that much market share? And if so, then why are they losing so much market share? Is it disruption of production at their end, or is it that we have just edged them out on a cost competitive basis?
So it's two reasons, Aditya. One is that what you said is very molecule dependent. So definitely molecules, especially broad spectrum antibiotics, semi-synthetic APIs, which are under a lot of pressure, but we don't sell any of those molecules. A lot of our specialty molecule revenues also come from Europe, where there is less pricing pressure. The second reason is historically Europe is also dependent on buying a lot of raw material from China. And because of what's happened with China and several CEPs also being cancelled, we're seeing a lot of opportunities come to us from China as well. And since we've historically had a strong position in those molecules, we are gaining that market share. So that's specific to what's happening to Neuland in Europe.
I will just have one more question. I'm sorry for that. When I see your operating margins, your EBITDA margins, at 17 odd percent, and if I look at your CMS and GDS businesses, would it be fair to assume that your CMS business margins significantly outpace your GDS margins? And if that assumption is correct, why are our margins so low in the GDS business?
See, we've said this in the past, Aditya. Our margins actually are very product dependent. It's not really segment dependent. Yes, we do state that the CMS margins are relatively higher, especially if you compare it with, say, the prime segment of the GDS business. But there are products within GDS who have margins which are far higher than some of our CMS products. But the range is quite diverse, and therefore it's hard to say. I think on an overall basis, we believe that our products are differentiated, as Suchet was also explaining. We don't have too many commodity type GDS products in our portfolio. And the EBITDA margin improvement that you're seeing is actually a result of two things. One, the business volumes are growing, and that's improving operating leverage. Second, the quality of the product mix, both within GDS and CMS, is also elevating the margin profile. So that's the reason why you're seeing an overall improvement of margin profile.
So sorry, I needed a clarification there. Would it be right to say that your capacities within CMS and GDS are non-fungible? They can't substitute each other?
So let's just back up a little, Aditya. So one, to answer your question directly, absolutely not. The capacities are fungible because, as Harsh was saying, that we are an API company, and when we look at our analysis internally, we do a product-by-product analysis, and wherever we feel that the margins are under pressure, we talk about what steps we need to take as an organization to increase those margins. So the only other point I would add to what Harsh has said is that part of the margin expansions also happen because of our continuous efforts to reduce cost. And what you also have to take into consideration is that our capital employed at Unit 3 is about 185 crores, but we haven't reached any operating leverage there. And as Unit 3 continues to get commercialized, we expect that the margins will continue to improve as well. So we have to be able to look at the whole picture. It is not very segment dependent.
Thank you. I would request Mr. Khemka to rejoin the queue. Request participants to please limit your question to 2 at a time. The next question is from the line of Cinderella Carvalho from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. Management, if you could help me understand, I have 2-3 broad questions. On the generic side of our business and on the CRAMS or the CDMO side of our business. So if you could help me understand what are the recent opportunities due to these Chinese disruptions that have come through our way. And the other aspect here I would like to understand is how well prepared are we to grab this opportunity. The other question that I have is, if we look at what you just now said about the utilization of Unit 3, when do you expect it to, in terms of timelines, to reach peak utilization? That's all from me.
Yes.
Ladies and gentlemen, we lost the line of the management. We would request you to please stay connected while we join them back. Ladies and gentlemen, we would request you to please stay connected while we join the management back to the call. Ladies and gentlemen, we would request you to please stay connected while we join the management back to the conference. Ladies and gentlemen, we would request you to please stay connected while we join the management back to the conference. Ladies and gentlemen, we have the line for the management reconnected. And so we have Cinderella Carvalho in the question queue.
Yes, thank you. Sorry about the call drop. So I think with regards to the question about the opportunity from China, Cinderella, I think that question was already answered in detail by Suchit a few minutes ago, so I don't want to get into that in the interest of time. Could you remind me what your second question was?
About the Unit 3 capacity utilization reaching its peak. By when can we expect that?
So I think that question was also answered in a different way, but I will still respond to that. I think Unit 3, as we've explained, is still in the process of getting capitalized. Today, the utilization of the plant is at a very low level. We mentioned that we just started commercialization this quarter. Going forward, we have plans to scale up both CMS as well as GDS molecules from Unit 3. But the quantum of how much that unit can generate in terms of revenue is something that is an evolving number, and it's hard for us to share because it really depends on the product mix and the nature of the molecules that we are scaling up over there. But we do believe that it will fulfill the needs of the organization for the next 2 to 3 years at least. And therefore, we have plans of deploying, more capital into it by creating additional production blocks, debottlenecking some of the existing production blocks to make sure that it meets, FY22, 23 requirements.
Just if you could refresh my memory on how much have we invested so far in Unit 3?
We've not disclosed that number, Cinderella. The capital employed is 185 crores.
Okay, that's helpful. And just to get back
I'm sorry to interrupt you, Cinderella. May I request you to rejoin the queue, please?
Thank you.
The next question is from the line of Nikhil Upadhyay from SIMPL. Please go ahead.
Yeah, hi. Good evening and congratulations on good set of numbers. My question is on the GDS part of the portfolio and along with the prime end. Earlier in the commentary, you mentioned that most of the growth was volume driven because the prices were down some 3-4%. I just want to understand, on the volume side, so in the product, say, of our top 10 products, would you say our market share has considerably increased? And what would that market share be now? And in terms of when we say that these Chinese players have exited and everything, do you see any sense that the new entries could be coming or new players could come up from other regions or in India? Or if you can just share your thoughts on this GDS part.
Sure. I'll just share some broad thoughts, Nikhil, because every product is different. So it might be difficult to give a detailed response on it. But I think in terms of, just want to clarify very quickly that I did say that the Gds business grew based on volumes, and also we got certain price improvements, not price declines. So I just want to clarify that. And I did mention that it's not a very significant price increase, maybe around 3-4% kind of an increase. But what's important is that the growth is driven by volumes, which is a very positive development. The growth has been across various products. We did highlight in our opening remarks that levetiracetam, lepadolol, mirtazapine, these are all products which have been part of our prime portfolio for several years, but they've been continuing to grow. I think in terms of our market share, the market share numbers are again quite varied. There are products where we have 75-77% of world market share. There are products where we have maybe less than 10% of market share. Across the top 10 products, I would say perhaps maybe 7 or 8 products, I'm speaking intuitively, our market share has been, kind of moving up. Again, different percentage points. Our focus with our sales team as well as our operations team has been to try to consolidate our market share for the products where we are already present in. The fact that we are a pure play API company also bodes well with our customers who are mostly generic companies for the Gds business to help them, build confidence with them. We are also seeing a trend where fully integrated pharmaceutical companies are also now, kind of looking at qualifying Neuland as a API source in substitution for their in-house API, which also has created a lot of opportunities across multiple products. So all in all, I think on the GDS front, we're seeing good opportunities in terms of volume share. We're not seeing that much pricing pressure, although, I would kind of remain cautious on how long that situation would remain. And I think in terms of market share, we're seeing a reasonable increase in market share across our top 10 products. And as Suchet also had indicated earlier, by focusing on cost reductions, we are trying to make sure that our position remains strong. I think with regards to China, Suchet, you want to comment anything? What's the impact of the Chinese trade issues and all with regards to our business?
Yeah, Nikhil, the only thing I would like to add is that we don't want to create the impression that, all our customers or potential customers are dropping the Chinese like hot potatoes. It just wouldn't be true. What's happening is that, there's certain products where China was a leader or was the primary source, where they took away our market share or eroded our margins for products that we were established. We've seen some of that business come back. Again, I think our strategic acquisition of Unit 3 was very well timed, and whatever capex that we had to make a decision on, in fact, we made that decision right after the lockdown because of the pandemic. So we took a very conscious choice that we should be prepared for any opportunity that comes our way. And in hindsight, both the acquisition of Unit 3 and that decision to increase the amount of capital employed in Unit 3 were well timed, because we're seeing the benefits of that now and we'll continue to see that in the future.
Thank you. We'll take one last question, which is from the line of Faiz from Fidelis. Please go ahead.
Yeah, hi gentlemen. Great set of numbers, and it's really nice to see you guys kind of making progress over the last couple of years. I had two quick questions. One, with regard to raw materials costs in terms of them normalizing, it seems, over the last year or so. Is that a trend that we see continuing? And two would be with regard to capacity utilization across the board. If you can add some color on those two things, that would be great. Thank you.
So I'm sorry, just want to clarify the question because the voice was not very clear. Your first question was with regards to raw material sourcing?
Yes, Sarge. So raw material sourcing and cost in terms of inflation or in terms of deflation, the raw materials costs, how are we seeing that panning out?
Okay, raw material costs. And your second question is about capacity utilization?
Yes, sir, across the board, yeah. If you can shed some color on that.
Okay, so I think you may be familiar with the situation. I think 2 years ago we faced, a lot of challenges with regards to raw materials that we were particularly buying out of China, and that resulted in a huge spike in our raw material costs, and it did impact our profit margins for the year. I think it was FY19. But I think as Suchet had explained elaborately in the call earlier today, we've made a steady progress on two fronts. One is cost reduction of all our products. So, we've had, our process R&D teams try to optimize the process so that we are, improving the efficiency and reducing our costs. Second, we've also steadily looked at de-risking ourselves from China by either trying to find alternate sources, either in India or elsewhere. I think as a result of those two actions today, we feel from a supply chain risk point of view, we seem fairly confident, much better than where we were earlier. In terms of price volatility, we've not seen any kind of volatility in the last at least 9 to 12 months. We believe we have better controls in place now to control any kind of volatility that may come out. But having said that, we tend to remain cautious. So therefore, we would, maintain that cautious optimism going forward. And as you can see, I think for this financial year, we are reasonably confident that our raw material costs will stay in line, and the gross margins that we have seen so far will continue to hold. I think with regards to capacity utilization, I think broadly our capacity utilization is maybe around 65%. It would vary from production block to block. It would also vary from production site to site. This is an average number across the board. Also, it's a very dynamic number. As we explained, we've already deployed 57 crores of capital in the first 2 quarters. We expect to deploy some more. And a lot of this capital is going into creating more capacity, either by additional equipment or debottlenecking. So therefore, our goal is to keep our capacity utilization less than 75% at any point of time, so that we also have the headroom to manage some of the uncertainties and volatilities of the business.
Understood. Thank you so much.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the conference over to the management for closing comments.
Once again, we thank all of you for your interest in Neuland, as well as the questions. We thought that all of the questions were very good and very pertinent to the business. I think as mentioned during the call, our CapEx program for this year is about 90 crores, but we definitely expect to push it up given the opportunity that we see in the market. The last thing we want to do is miss opportunities which are being created by the current situation as well. Obviously, the CapEx decisions we make are based on our operating cash flows, our free cash flow, taking the overall balance sheet ratios into consideration so that we can continue to maintain the strong liquidity that we have in the system and not take on any undue risk. Obviously, our place in the CMS business is with companies that have molecules in early stage that need a partner that they can trust, a partner that can take a molecule from early stages of development all the way through commercialization and manage it through its life cycle. That's where we've gotten the maximum traction, and that's where we intend to build and consolidate our strategy. I think Unit 3 was a very timely acquisition. We have commercialized it. We continue to invest in it. And we will see that Unit 3 contributes more and more to the top line of the business, both for our contract manufacturing molecules as well as gaining market share for our GDS molecules. Finally, I think the China opportunity is there, both in terms of being able to source from China, but not completely depending on them. So I want to clarify that though our dependence on China is completely reducing, it doesn't mean that we want to buy less and less from China. At the end of the day, we have to make sure that we are being competitive and we are partnering with companies and countries that will ensure that we're able to maintain and grow our market share. However, given what's happening in China, we have taken steps to make sure that we are not exposed and we're not putting Neuland at undue risk because of our dependence on China. So I think that's kind of what was discussed in today's call, and we thank you again for this consolidated interest in Neuland, also the organizers for this call. Thank you very much.
Thank you. On behalf of Neuland Laboratories Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.